We should be live, Sean. How are you today, buddy?
Not too bad, man. Not too bad. Back to grey and miserable weather, my favorite.
That's right. You going out, getting the Chase lounges out and sitting out by the pool, that kind of thing?
Oh, dude, it's been officially melting temperature for me for far too long. I mean, I know all you Americans kind of are into your AC. I even had to go and buy an AC and install it. That's how, how completely unhappy I am with any of this kind of stuff.
Yeah, and we definitely need it this summer. I mean, it's like roasting up, and I'm in the middle of the East Coast right now, and it's not too bad. It's a little cooler than usual, but between the Canadian fire smoke and the heat in the South, it's just pretty insane right now. But so I always envy that kind of weather. But as you know, we don't have Brad today; he's off.
We can have an adult conversation. Thank God.
There we go. Yeah, we got rid of that ETH Maxi.
Shitcoiner.
I know he's that shitcoiner. Yeah, I know he's listening too. I know
he is.
So hey, man, we hope you're having fun with your son, and hope you're getting a lot out of the college tours. So we'll hold down the fort. We won't roast you too hard, Brad, and we'll try to live up to your standards.
So is this not the one chance where we
we could go after him pretty good here, couldn't we? But everybody knows Brad. Everybody loves Brad. So his quirks are his strengths, and
he's a good guy. And I hope he's not listening when I say that.
But so Sean, since it's you and me talking, I figured I wanted to kind of just dwell a little more into I would call it your origination story, like just at the very beginning of BTC when you jumped into mining. Just kind of want to understand better what kind of caught your attention back there, and what really caused you to focus to where you've obviously generated a tremendous amount of success since. Could you share a little bit of that for our listeners on that origination piece for me, please?
Yeah, I mean, it was very fortuitous and part-time. It was actually my son who kind of brought it to my attention. And I like the full story it shows you how fortunate it was. I was in the middle of renovating what in this country we call a man cave, which was kind of a building at the end of the garden, and trying to set it up as an office. And so I had a couple of PCs in there, and but it wasn't completely finished. And my son Louis came to me and he said, "Oh, you'd like this thing called Bitcoin." And I had a look at it, and I'll be honest, I thought it was utter nonsense. Okay, it's like clearly, this is like 2010, but I kind of like the politics. So what we used to call hashing back then, it wasn't even called mining. And the actual kind of truth of it was I had a spare PC, a Dell Omniplex, I remember it well, and I kind of went, well, I'll donate some computer time to this clearly mad project. And so I wasn't doing it to collect coins. I didn't believe in it. But I liked, I would have been pretty politically aligned with the little bit I understood. And so to me, it was like, I'll just donate some computer time and, to these mad people. And that, like, literally that was it. Yeah. But like, you used to get so many coins back then. I know it's kind of, and just in case anybody's kind of wondering, I deleted I deleted the keys to all the coins I mined in 2010. Because I found a more interesting project to donate my computer time to, which was SETI, which was a US government kind of project for scanning through microwave data of the universe and blah, blah, blah. So, but it was my first exposure. And so I guess I was very lucky. I don't have any of the coins. I have no regrets. I would imagine you're talking, to kind of bring up, you're talking tens of thousands of coins, which is what you would have been, mining back then, because you were just constantly, getting them. But I kind of kept an eye on it, and then we opened up our first kind of, we went out and, we missed the whole GPU. So for those who don't know, the phases of Bitcoin hashing or mining were, you started off with a PC, then there was this big thing about where people were using GPUs to mine. And then finally, you got to this phase of specialist hardware, what we call ASICs machines, which is how all the mining is done now, which is these are just machines that all they can do is mine Bitcoin. That's it. Yeah, they can't, and a couple of shit coins, but, there's specialized hardware specialized chips for the 256 hash. And they were just very efficient. And so we bought a bunch of these, and then I got kind of very much into the space because I kind of went, actually, the fact that, it's bizarre the way your mind works. The fact that somebody is prepared to develop this kind of and manufacture this custom hardware gave it some credence in my mind. And then we mined. We were always mining. We had at miner was it S5s, S7s, S9s. Wow. Did we have S3s? I can't even remember. And so we were constantly just mining it, and it was part-time. I mean, it wasn't, what I was doing for a living. And that was probably lucky because I missed, Mount Gox. I mean, I was aware of it, but like I wasn't trading. I was just, we were just converting electricity into Bitcoin for, 8 years.
Wow.
And recently got back into a bit of mining as well. We stopped, we had a pretty big mine here, which we shut down in 2018, but kind of recently got back into the game because I think it's a decent time to accumulate mining capacity. And that's kind of it. And then in 2017 is when I kind of looked at this and went, maybe, just maybe, I should try and figure out how all of this stuff about line go up, line go down that seems to be having a significant impact on my net worth. and so that was my curiosity, was simply then looking at the markets and going, what really makes the price of this thing tick? Yeah.
Mm-hmm. Yeah. I mean, what's cool for me is like, I was kind of on the sidelines for a lot of that. And, until like 2017. And, I just kept hearing, like I kept getting media, and I don't even know if I was heavy duty on even Telegram at that point, but I would see like little things talking about, in the earlier that year, I think that was when I first bought my first pieces of it. I'd watch it run up, and then I was watching it run up in the fall, and I was kind of like, I really need to pay attention to this now. But, I was always in just, retail buyer and holder or trader or whatever. And I kind of missed all that. And one of the things I always find interesting is, like, when did all of the concentration kind of start in Beijing, before it ended? When the two big mining consortiums were there. Was that like 2016, 17, or was that more like 18, 19?
Yeah, no, that was probably a lot earlier than people think, because Antminer, who were simply the largest manufacturer. So to put it in perspective, back then, if I wanted to build a mine, I have to go off and order a bunch of these things from a Chinese company called Antminer. And they used to be manufactured in batches. So you'd be getting the batch, it wasn't like a continuous production thing. I'll get, batch 5 of this year, and I've got, 300 miners coming from that. And then you've all the logistics of actually importing that into Ireland and paying duties and so on. So we were always getting a worse deal in terms of, versus what was happening in China. And the other thing about what made China, the concentration, well, I think there's a couple of things, but one of the things that was simply the cost of cheap hydro. So, these guys were buying electricity, at cents in the dollar of what we could buy. And I think there's also a big factor of capital flight, as in avoiding capital controls, because they had the advantage of being able to buy this all in the renminbi or yuan, whatever you want to call it. Okay, and they're mining value up into the cloud, so they're spending their local currency and they're generating something easily tradable for dollars. So there was a lot of things that made sense for a long time in China. If you wanted to, both the cost of the equipment, the the availability of the equipment, the cost of electricity, and also it's just a brilliant way to get your money past capital controls, because you buy all of this stuff. You buy your electricity, and a lot of these guys were buying power plants. They were buying hydropower plants in the middle of nowhere, and great, and they're paying local currency for all of this. So all of a sudden they've got a dollar tradable asset, and I think that had a lot to do with what concentrated mining power in China for a long time.
Yeah, that makes a lot of sense, because I can remember when I was doing a lot of work over there in like 06 through 10. The standard model was for them to start moving money out, and there was a bit of a capital flight problem back then too, and so they started really choking it off. And I think you had to go to one of the national groups, maybe NRDC or somebody, for any approvals. And so when I started looking at this and all the miners were there, I was like, of course, because the model is, move at a certain age, you move half your money out, buy the house in Florida, put your kid in the private school, and put mom and, grandma and everybody there. And then come back and stay. And if anything went bad, you would, I guess, split, but not with all those assets, but you'd already moved half. So once I started looking at Bitcoin, or crypto, I started thinking, man, it's just a piece of paper, or it's just a microdot picture that you've sent to somebody else with another message that you retrieve on the other side. I mean, it's going to make that whole capital flight issue, unstoppable for China, and then the crackdown. So then we saw everybody, then all the mining rigs were heading to the US, and, a lot of public companies, et cetera, doing that. But still, they couldn't quite crack the nut, because, my read is they're, don't quite have the cycles down, as in expanding too fast when you should be, contracting, and don't quite know it as well as, say, you do. Do you have any comments on that?
Yeah, I think if you look at the whole of the bull and current bear cycle, what we saw is an exercise in leverage, and all leverage ultimately has to delever at some point. And so what you had is, what's a very interesting business model, which was a lot of these US public mining companies were set up as pure Bitcoin proxies. So what that meant is that they had kind of a fiduciary duty to balance sheet their Bitcoin. Okay. And so the only way they could pay their operating costs was literally to always be seeking investors. Yeah. So that's a dangerous game to play, because ultimately, easy capital is not easy anymore. And as proxies to Bitcoin, as the Bitcoin price fell, then investor confidence got knocked. And in many ways, what you can see these things that they were literally forced to unload at very low prices. So I think this idea of Bitcoin companies as a proxy, which we in terms of public limited companies, has advantages and disadvantages. The disadvantages to me have always been that if you don't understand market cycles in an asset like this, and an asset that's still so remarkably volatile, then you've got a big problem. Yeah, I mean, and I think we've seen that play out, and I think we're seeing it play out again personally, because despite Shizzy bringing up the XRP news, which I'm going to say is not what people think it is because they haven't read it. But anyway, that's neither here nor there. I think that we're seeing a similar thing, because you can see the hash rate is heading to the moon on the assumption that price heads to the moon, and when price corrects, in my opinion, it's going to correct way harsher than anybody thinks. It's just going to be more miner blood, but that's okay. I mean, the network keeps ticking. What we're looking at, from kind of to give you kind of a viewer from our side on mining, is we're going, look, we expect this bear market to last at least another 6 to 12 months. And the cost of hardware is down 90%. So this is a good time to do that. But we also actually need to be able to fund operations when we're mining at a loss. And so, you know, anything that we're doing now, we're literally looking at it and going, look, let's assume Bitcoin, let's make the assumption Bitcoin's printing below 10K for 6 months. Maybe it will, maybe it won't. But in terms of funding these kind of mining operations, if we take that assumption, then it's it gives us a stress test of our investment.
Do you find that when, like, say it goes into that sustained, maybe downward pressure, do people, I mean, how do people turn off mining capacity and then the rewards go up for people who stay? I mean, is there like a model there on how you analyze when to go ahead?
There are lots of different models, and a lot of people will turn on and off capacity. Literally, they treat it as a fiat factory. Yeah. So they go, look, we know our revenue on average a day. We know our costs on average a day. And when costs go above revenue, then we just switch off and we switch back on, you know, and that can be affected by two things, you know, the price of electricity and the price of Bitcoin. For me, I don't think that's ever a rational view, because if you're playing in this game, you're playing, you know, one of the riskiest risk assets that's out there. And so simply treating it as a, you know, I laughingly call them, you know, sandwich factory, doesn't reflect, your reward has to reflect the risk given. So when we look at mining and the way we've always looked at it, we've always said, look, we have to fund this for a period of time, let's say 3 to 5 years. And when I say fund, that's not just building the mine. I mean, that's all the operational costs. And we then look at the market and go, maybe we're going to be a year underwater, but what we're really doing is locking in a production rate for Bitcoin over an extended period. And does that price of production make sense to us as a good investment over a 3 to 5 year period? And once you look at it in those terms, I think then you have a very solid way of looking at mining. And historically, you know, any 3 to 5 year period in Bitcoin, even if there were times when you were minting Bitcoin at a loss, i.e. your operational costs were higher than, you know, the current production rate times the price of Bitcoin today, it always turned out very well. So for me, they're like TWAPs. Yeah, I like TWAP buying. Yeah. I'm going, yeah, look, you know, we'll start a mine. Okay. And effectively, we're buying X amount of Bitcoin every day. And while the price will fluctuate up and down and sideways and left and right, we would be confident on the long-term trajectory of price.
Yeah, it seems like that's the key. And, you know, any of these is, you have to believe in long-term price appreciation.
Yeah, otherwise make a sandwich factory. Yeah, exactly.
And so I think that, you know, when you look at all the dynamics out there, you know, from our various backgrounds, I mean, you just see so much user adoption everywhere. I mean, even as these cases start clearing the courts in the US and elsewhere, you know, we're seeing this kind of refinement now that's starting to come together that I think is pretty interesting, because a lot of the stuff that, like, you know, we saw Mashinsky got indicted today for, or arrested today, actually, for the Celsius stuff. You know, a lot of these groups were trying to create models that could, you know, they weren't purely decentralized. They were trying to create centralized models that could somewhat fit into the US regulatory system before the regulatory rules were in place. And now they're all getting, you know, hammered for it. So I'm wondering if, you know, a lot of the incentives around, let's say, trying to fit into that regulatory box, you know, particularly in mining and other areas, once that goes away, then, you know, it seems like we're back to, you know, kind of, you know, all the advantages of decentralization that, you know, we all kind of have fallen in love with various aspects of that, into like the mainstream financial markets, which is, you know, changes the game, so to speak, but it doesn't change this game. You know what I mean? It doesn't change the mining game, because you still have to, you know, power the network basically. And so I guess go ahead.
The way I always look at mining is it's kind of, you know, it's not data centers. It's far less sophisticated than data centers.
Mm-hmm.
But ultimately, all mining projects are power projects. That's all they are. The machines are not that sophisticated, but it's the management of the power, and how you're managing that, and it's at a scale that would probably shock even a lot of hardened Bitcoiners if they actually looked at the kind of massive capital investment and sites running around the world. It's a true kind of heavy industry almost. Yeah, this is a big thing, and it's also why I will always just be a Bitcoiner and not a shitcoiner, because there's a fundamental point about how mining affects the viability of the asset, in that no Bitcoin is ever produced that isn't an exchange of value for value. Yeah. So what do I mean by that? When XRP, who won their case, I mean, they didn't exchange, they just minted tokens and sold them to the public. Yeah. It was an exchange of some perceived forward-looking value for actual value, for actual dollars. Every Bitcoin that comes into existence, somebody had to expend energy for it. They had to have a certain level of technical competence to be able to do that, and they had to have capital investment in the equipment to do it and operational costs. So it really does mark it as a completely different asset than just about everything, because there's no forward view of the price. People are mining it. They're exchanging actual usable real world value today for that asset.
Right. Yeah. And there is, like you said, there's no discounted cash flow analysis off of future revenue or something like that pegging value. It still is the network itself. It's not like cash flow driven. Okay.
No, it's not I mean, everybody will mine on the basis of, obviously, some forward view of price. But again, the fundamental difference is that the network offering you Bitcoins, okay, it requires for you to actually make a real investment, okay, and an actual investment of an asset that is highly valuable. Unlike anything else in the space, where it's they're minting some tokens, and the market is not really they're offering the perception of value rather than
right.
for exchange of value rather than an exchange of value, and
right.
That's why I think people who get into this space deeply more and more understand that controversial. Unlike me, the proof of stake is clearly just nonsense. Yeah, but there you go. I won't go down that road because Brad isn't here to annoy.
Yeah, exactly. I went back to my laptop just because I wanted to get the other mic on, since I'd be talking a lot today. So I hope it sounds better, everyone. It seems to me that I think what you're saying is that when if you look at, I'm not going to pick on Ripple, but just say any other one where you go and mint something. Well, with BTC, you're actually converting a market-priced asset, energy, that's a hugely robust market around the world that has local, variances and things like that. But you're actually, like you said, you're converting a real world. This sounds bad to say it that way, but another kind of TradeFi sort of metric to justify everything. Whereas, when you can go in and like if you could go in with, say, TUSD and mint coins on another site, what are you really exchanging at that point?
And I think that there's many reasons why Bitcoin is different than the rest of the market, and why people like me just don't view it as the same asset. Yeah, that doesn't mean the other assets don't have some value ultimately. But the point I'm saying is that the actual generation of a Bitcoin is tied to the real world commodity price of energy. Mm-hmm. Yeah, it's an exchange of that real world commodity for Bitcoin. So You know, that, and I think that's, again, while, you know, people can spoof on about mining and the environment, they're just idiots. They don't understand how it works. Yeah. Although it's quite interesting to see BlackRock now shilling, you know, the ultimate, you know, Larry Fink, ESG people are beginning to spin the, you know, Bitcoin is actually good for the environment story, which it is.
Yeah.
But, you know, so
well, everybody always knows.
It's amazing. It's amazing when you have the opportunity to mint some money. If you're BlackRock, how the narrative changes very fast. Yeah.
Yeah. Well, it's, you know, and then you always hear something like, "Oh, power consumption exceeded the entirety of Finland," and you know, it's a standalone statement like that. Versus, well, what was the power usage for the entire bank? Or let's not even go there with banking and trade fi, but just say the entire gold industry. You know, mining gold and doing all of that.
My favorite statistic on Bitcoin energy usage is that the entirety of annual use of Bitcoin mining energy, Bitcoin mining of energy is less than the amount of energy used to light Christmas tree lights in a year.
You know, that's a good one. That's a good one, man. Hey, you know, what I was speaking of that, the BlackRock stuff, you know, they get in trouble because of, you know, I mean, I'm just going to use the word, I don't, you know, the woke stuff. Different people perceive it different ways. I'm like, I think you got to play the long game and start moving in the right directions. But what I started thinking about with their Bitcoin holdings was that with inscriptions, and this might already be happening, but with ordinals and inscriptions, is there a way to inscribe on each new, say, Bitcoin created through the mining process that it came from, you know, green energy source versus, you know, say, you know, coal plant or something, you know, where it had a green label to it, like say for some of those groups that are out doing decentralized mining on renewable energy patches where it sort of captured energy, you know.
I mean,
it's a tag that is, you know, something to defuse that FUD per se.
Well, there's a problem with it. I mean, yeah, you can inscribe anything onto a Bitcoin within, you know, the block size limit. But there's also nothing from somebody who's using, you know, the dirtiest coal plant in the world also inscribing onto it.
Oh, yeah, I see. Okay.
Now there has been a talk for years about whether, you know, there could be a green Bitcoin market versus a, you know, a kind of dirty Bitcoin market. I mean, I personally, you know, that's been a conversation for a long time. I personally don't see that as really anything that will ever happen. Because like it kind of got, because most people don't know where Bitcoin mines are. Okay, we got the publicly quoted, but most Bitcoin miners have zero reason whatsoever to have any publicity, to have anything. They're just sitting there shoveling energy into coin. Okay, like they're, you know, they don't need any public profile. People don't need to know where they are, with the exception of the publicly listed ones. You know, there's nothing to shill. There's no reason for anybody to know where they are or that they exist. So I don't know. I can, you know, it has been a topic of conversation actually for quite a few years, whether, you know, green Bitcoins. There's an even bigger conversation, which is whether newly minted Bitcoins, as in, you know, Bitcoins that are fresh and have never moved, have more value than used Bitcoins because they don't have any history. So there's all these kind of nuances that people are putting on things. I personally think if there is a class, well, I personally don't think any classification of Bitcoin will ever work in terms of affecting, you know, there being different price levels for different Bitcoins. But if there was, I would suggest it's the new shiny coins having more value than older coins because they have no history. They've never been stolen or used for, you know, nefarious things. But I don't even think that's really going to happen. Because there is, I mean, just to be clear, you know, I mean, I trade in centralized exchanges. I have no problem with that. If I try to move a mixed Bitcoin, okay, as in, you know, what you guys would call tornado cash, what we call, you know, a coin join coin, I have to spend a long time talking to the exchange to accept that.
So they are really monitoring that close.
Oh yeah, indeed. And if I send a coin from a CEX to a mixer, I also get tapped on the shoulder. So
but there's legitimate applications for that, to do that. It's not.
I have one legitimate application because every single coin I own is mixed. Okay, like literally, and it's called privacy. Okay, so like literally every single coin I own is a mixed coin. I have no issue with that. I'm not using them to run drugs or anything. Like, I'm just going, if privacy is available, I'll have it. Thank you.
Take it. Yeah, yep. Absolutely. No, I've been messing around on ZK Sync a bit lately, playing over on Maverick, which we've had on the show, and Azumi Finance, which you haven't. But there's a couple other ones, Kanagi Finance, et cetera. And so I ran across ZK USD, which, I hadn't seen before. And I realized it is another privacy type coin with a mixing pool attached to it. And I said, so these are, they're still popping up on the new chains, which I find interesting. But the application to me is estate planning. It's like, if you want to put these in your grandkids' hands, or where maybe the other kids don't know about it, or ex-wives don't know about it and stuff, and you want to stay private, these are perfect applications. Or if you're in, Iran and you're a dissident and you're funding some kind of a protest action,
yep.
Legitimate activity. I mean, everywhere, it's like there's tons of decent activities. It's just, the few big ones that use them in ways that, are deemed inappropriate by others.
And look, on privacy, I'm just a huge advocate. I'm going like, there is absolutely no reason that anybody should know how many coins I have, where they are, and whatsoever. So I mix them, and I go, look, and again, I'll be absolutely clear. Like, I've zero to hide. Okay, yeah. I just want to protect my privacy, and I think, I have that's kind of a bridge I'll die on. Yeah. And I've had this, with my own favorite exchange, and I just said to them, okay, well, if you don't like it, I'll fuck off to another exchange. How about that?
Mm-hmm.
And, fortunately, since I represent a lot of their volume, they can't tell me to fuck off. But I'm sure if I was doing smaller size, they probably would. Yeah.
Yeah. But I think it's like you have the conversation and everything's fine and they get it. I think that,
I tell you where it got to. We actually had to send historical electricity bills to prove that we mined them, since we couldn't prove anything because they were mixed. Yeah. But look, that's the way the world is going. I think it's, I've always said, to me, Bitcoin's biggest problem is privacy. I don't think it will ever be addressed on the base chain. But I do think we will see side chains and layered solutions to it. And I think the more the world is heading into the surveillance world that it is, the bigger the driver is for that. So I'm kind of pretty confident that there are emerging solutions for privacy within Bitcoin that are not base layer, because there's lots of issues with base layer privacy, which is, how do you audit a chain, which is all that the nodes do all the time? All the, the nodes around the world are effectively auditing the chain if the transactions are private.
Yeah. How do you do that?
Yeah, I mean, it's complicated. It's unnecessary. So look, I do think privacy will improve. There are lots of ways to air gap your Bitcoin that are like, old OG tricks, that I'm not necessarily encouraging people to do, but you can simply swap them for something on one exchange, send it to the other, and bloody and all these kind of things. The ultimate one for anybody who's interested is just use your Bitcoin to buy a mine and mine yourself new Bitcoin. There you go. Yeah. That's the ultimate air gap.
Yeah, because it's not, we always focus everything on regulators, because we're trying to determine regulatory clarity here. But that's not the reason that's not the reason that you want to maintain privacy. You maintain privacy from everybody else, just like you don't, put a pile of cash on your front porch, No,
or if you have a few bars of gold that, you've legally got. Because again, there is actual personal security issues here. Yeah. So
Right.
if it's provable that you have an amount of Bitcoin that somebody's prepared to use a drill on your knees to remove from you, okay, maybe, just maybe, you don't want that information public.
Exactly.
Because it is a bearer asset. They can rock into. I mean, I've had one particularly interesting group of people rock into my house with a gun, and I shit you not, okay, to try and persuade me that my Bitcoin was better in their hands than mine. This actually happens in the real world, yeah. So be private. Nothing wrong with it whatsoever.
Yeah, in everything you do. I mean, that's the thing. I kind of in our societies, we've sort of in the post sort of social media or the internet era, let's even call it that, have so many people growing up native to that tech have just shared everything out there that
there's also this bizarre view that if you want to be private, you're hiding something, which I just do not buy. Yeah, I'm going, look, 99.9999% of my life I'm overly public about. I don't have an issue with that. But the other 0.001%, I want to be private about. I have a right to do it. And if you think anything of that, that's your problem, not mine.
Exactly. Well, and at a certain level of, say, the business game, the players on those teams conduct, oppo research. They come in, you're trying to drive a negotiation, you're trying to find leverage. They're digging in everywhere they could possibly can to find stuff. So with everything out there, everybody's sharing so much, everybody, if you ever get in those situations 20 years down, not you, but I mean, the younger folk in say 20 years, you're going to realize that people are going to have book on you and probably behavioral psychology assessments along with events that they're going to be able to manipulate you and drive you toward a better
Joe, I mean, this is the ultimate thing. And I'll ask you this question because I know my answer and I imagine it's the same of yours. If all the stupid shit that you did when you were growing up and in your early 20s and 30s, okay, had pictures on social media back then, okay.
Yeah.
Like, wow,
Yeah, I would probably be called a lot of names. And, we'd probably all be in jail or something, at this point.
Well, the lawsuits would be ongoing, let's say.
Yeah, it would be all, I mean, we're not talking about criminal stuff, but, just stupid things, alcohol-fueled stuff, idiot decisions, ex-girlfriends, you name it. I mean, it's everywhere.
And that's kind of it. I mean, I don't know how this works out for people of this generation who are so happy to share everything on social media. With the kind of advent of AI and big data and all of this, I'm just going, sometimes like there's, have fun. God knows I had enough fun in my life. Yeah. But there's something cool about being private as well. Yeah.
Well, it can't be weaponized against you. And I think that's what a lot of people don't really understand, how that can be used later. I mean, we saw it decades ago with people applying to college and, they put some picture of them doing beer bongs on, Instagram, and all the admission people are looking at it. And they're like, or the job hirers are looking at it and they're like, can't get through those screens because it just looks, it's a public record of it, basically. You can't deny it. So that hurts you. And, luckily all of the shenanigans we went through, there is no digital record of it. But everything anybody does now.
Certainly bloody hope not.
Yeah. Now there is.
I'm sure there's a few Polaroids floating around.
Yeah. Gonna have to strategically go back and pull all those, but and the negatives. Remember the negatives, not from Polaroids, but from the other ones. But yeah, so I mean that's a legitimate privacy thing, and it's that we look at it that way as a threat to give out too much information. This generation has shared it all, and we'll see how it turns out. Maybe there is something about if everybody has the dirt on everybody, it's mutual assured destruction. I don't know, but definitely makes me uncomfortable. So what have you been seeing lately in the way of I know that you and Shizzy talk a lot about the ordinals or have in the past. That kind of seems to have died down a little bit in my mind, just from what I'm seeing around. But what do you see coming next over on BTC side? Anything new that?
Well, I think. Yeah, I mean, I've first of all, just to touch on the Ripple case, I have the actual court ruling in front of me here, and it's kind of a draw in a way, because what the court, and again, I'm just reading this in real time, but what the court has ruled is that the initial sale of tokens was in fact a securities offering, which I don't think anybody could argue with, but the secondary sale was not. So that's kind of so the institutional sale of tokens did violate federal securities laws, and the sale of XRP tokens on exchanges did not constitute investment contracts, which is interesting wording, which I'm assuming means probably not secure. But it's like all these things, it's very nuanced. CT goes off and goes, Ripple isn't a security. For something like that, that could very well be the case, that secondary sales are not a security, but the devil is in the detail here. So I would not be rushing. I mean, the market doesn't seem to give much of a shit, to be honest. It's kind of hardly ticked. So I wouldn't be, it's something, I will post the actual ruling into the Telegram channel.
Yeah,
people
please.
can read it themselves, because it's a long ruling. It's 34 pages. It's not the narrative, the instantaneous narrative that's been put out on CT, that XRP is not a security. It may well be, but there are what has been found is that there are security laws violations. So let's see.
Well, this is something that I talked to a friend of mine, Lewis Cohen, a lot, and at New York Crypto Lawyer, or NY Crypto Lawyer, and I met him when he was at Hogan Lovells, and then he's been an SEC type attorney for a long time, and he's very pro crypto, and he was we've been talking, and others, obviously many others also talk about this, but that there is a way to have a securities offering without it being a security. And I think that's where it gets with this eventually. I mean, after all,
my initial read on this is that this is good for secondary sales and bad for the ICO. But again, I would just caution that, it's worth reading these things. If you believe this is fundamental to the market, spending time reading the 34 pages rather than relying on some CT, two-liner analysis is probably worth it. And I'm looking at the market, and the market don't care right now. That Bitcoin market.
Yeah, no, I see Ripple's up and a few others, but you're right. It's like BTC. What is it, still at like 30 and 800 or so, something like that?
Yeah, I can share a chart and say what I mean by it doesn't care.
Okay.
I think the charts. Yeah. So this is short term. So again, not trying to be a bear, but we had this pump up, out of range, and we're just stuck in this range. And so, the Ripple pump, if you want to put it in these terms, was this, but it's like completely meaningless. Yeah. As you zoom out. So I don't think it's in terms of Bitcoin, which ultimately will, being the pristine asset in the space, will, shitcoins can run up and down a little bit. But right now we're just stuck in this, these are 4-hour candles, to be clear. So this is just, we pumped up to this little trading range and nothing has changed. So you can see we went up to the kind of, again, 4-hour candles upper side. We've rejected off it. Volume has died. Whales are back selling. Looking at the live data. And so I wouldn't consider that the market has viewed this as anything special. Otherwise, we should have seen a God candle, and all that we're doing is we're just stuck in this bloody range, this annoying range, which is driving all traders mad for the past couple of weeks. So we've been in this range since, the 23rd of June, so a couple of weeks, and it's just chopping, and we're just waiting for the next move.
Yeah, I think it has to get through the whole process where everybody says definitively what things are, and as far as Ripple and everybody else that's going through this process. But as to Bitcoin, we already know it's not a security. It's already been deemed not a security. So you're right, it probably won't. For this type of thing, it's like, It's like a meh kind of thing to Bitcoin. And
No, I mean we did have a, you know, if you just zoom down here, I mean you can see there was, you know, a little reflexive pump here in, you know, 15 minutes that was then just sold down. Again, that doesn't mean the market, but to understand the impact on the market, on Bitcoin, which I think if you're a viewer of markets in the longer term is the one to keep an eye on. It is the, you know, it is the pristine asset in the class. It just doesn't care in any real way, because, you know, if I zoom this out to weekly candles and, you know, show me the Ripple pump, yeah, well, it's just not there.
Yeah,
you know, it's not produced anything of any real interest. Asks on the order books continued to hold, and in fact were added to. So asks being sells, and there's a lot of selling up at this top end of this range here, and there's a bit of buying. So yeah, nothing fundamental. But again, like, you know, what from a US standpoint, does this have any significance with respect to, you know, Coinbase's case and so on? I think the devil is in the detail, and I wouldn't like to call it without actually looking at the detail, to be honest. But certainly, like Ripple took a bump, that's to be expected. Just looking at the rest of the shitcoin market, if we zoom out, I mean, yeah, you know, Sol's been on a pump, BNB is stuck in a range, Ethereum's stuck in a range, Canto is doing a nice bounce off support here, but, you know, it's been doing that for 2 weeks. It hasn't really affected anything, and I'm sure Ripple is taking a pump. Of course it will, yeah, but, you know, is it sustainable? Is it meaningful? I don't know, but ultimately the market will be decided by Bitcoin, and so just to kind of hit on this a little bit, because there is something extremely interesting happening in the Bitcoin market. Sorry, I need to share. Sorry, man. I'm actually sharing the wrong thing. Just hang on a minute there, Joe. Let me just share screen. And what the hell? Window. That's what I want to share. Okay, share. If you could show that, Joe.
You got it.
So yeah, sorry. To just quickly on the kind of Bitcoin charts. You know, Sol's been on, these are weekly candles. Sol's been on a rip. Ethereum hasn't done anything interesting. BNB is in a range. Canto, this one here did I love Canto from the point of view of price action. It did a perfect, you know, bounce up here. To convince me it's bullish, it's going to have to take, you know, this 19-20 cents. I don't think it will. Could very well be wrong. Maybe it could even run to 23, but I would be a little bit cautious here. Not advice, just from my own point of view. Ethereum, Bitcoin, still screwed. So outside of Ripple, the reaction is not substantive. Yeah, it's not substantive. Yeah, I mean, again, zoom out. One of the kind of interesting charts, if you'd stick with me here.
Yeah.
Worth looking at. If I can, this one. So I think this is one of the most interesting charts in crypto at the moment. Just stick with me here while I just reload this. This is the correlation of Bitcoin to the rest of the market. So actually we'll just do this one. And what you can see is from the top, okay, so you've got blue is Bitcoin, orange is S&P, or orange is NASDAQ, and the cyan or whatever color that is the S&P. So what you can see is that we've been moving directionally. Here we go, directionally all the way down in perfect lockstep. Yeah. Okay. So one of these narratives that we always get on crypto Twitter is, if it wasn't for 3AC and Luna, you know, we wouldn't be down here. And yet the truth of that is complete nonsense, because all that we've done is move in complete lockstep with TradFi. So unless Do Kwon had some influence over the price of the NASDAQ and the S&P,
yeah,
I'm thinking not. There have been two deviations which are worth noting. One is the FTX crash, where Bitcoin was going down and TradFi was going up. So I think that's the only real black swan that we've actually had. And it's a relatively small one. And then we have this moment here. This moment here to me is something that is of huge significance, because this is the day that TradFi market makers decided to leave the space. Okay. And what we immediately see is that we swapped a negative correlation. What do I mean by that? I mean that we went down, okay, while TradFi is pumping, okay. TradFi went down, okay. We did a little pump. So all of a sudden we've switched to some form of negative correlation, which I think it shows you the influence of the TradFi market makers in this game, in that we are currently cut adrift from the traditional market. So kind of, you know, this thing that all of CT seems to have learned about, you know, looking at, you know, CPI prints and all of this. Yeah. Good luck with that, because we have zero correlation. In fact, we have negative correlation with the traditional market. So all of a sudden, this is kind of meaningless to us. And if you then look at a chart, which again, I go back to my thing on liquidity, which is simply to say that if orange is obviously Bitcoin price and blue is the amount of liquidity in the space, yeah? Okay, so the amount of dollars that are actually existing, which is constantly going down. And a lot of people will rightly say, hang on, we've been going up while, you know, liquidity is going down. But what you can, again, very easy to understand why, which is if we put in Bitcoin dominance onto the chart, and if we actually put in Bitcoin dominance into the chart, there we go. Let's let me rescale this. And I think this is a very interesting and bearish signal. So what we see is liquidity being drained from the space, okay? And the available remaining liquidity as measured by Bitcoin dominance is being compressed into Bitcoin. So this is classic what happens in an exit, so that the total amount of liquidity in the market is you know, just heading south at a rapid pace, and yet the price of kind of the pristine asset, Bitcoin, is increasing, and that's nothing particularly bullish in the context of liquidity leaving. It's simply a compression of liquidity from the riskier ends of the crypto market into the less risky. And yet liquidity still goes down. So
yeah, that's interesting to me, because, you know, we'd always talk about how in 17, 18, you know, you're with no real stable coins that I can remember at that point. We were all, or nothing you did. You always went to Bitcoin, you know, after your trade. And then when stable coins advented, it was like a way to go, oh, okay, I don't have to worry about volatility. I'll go there. But now it's like, maybe these are all the hardcore traditional players that have been there for a while, and now they're reverting to, okay, now we're going to go straight into Bitcoin and hold there as our safety hedge again.
The way I read it, and it's not advice, is that it takes time. It takes time to scale out of your positions out of a liquid shitcoins. And therefore you need these kind of longer distribution patterns, because if you scale out too fast, you literally kill them. So you let them, you know, stick in a range, and you do that. And then you pull that into Bitcoin, which has actual liquidity to withdraw from the market. And that's like classically how somebody would exit this type of market if they've got Bitcoin, you know, if they've got, you know, shitcoin holdings, is you need to do it very gently, because the buy liquidity isn't there at any one time to be able to support like an insta leave. Yeah. So what you're doing is, as you know, retail shitcoin liquidity turns up, you're literally just hoovering that up and saying, thank you, you're into Bitcoin, and then you can slowly exit from Bitcoin. So again, I think that there is literally nothing at all bullish about this market. I could be completely wrong. It's not advice. I think we ain't seen nothing yet. From my perspective, in terms of how bad this market can get. I have a little black swan in my picture, because I think we were going to get one. Again, unexpressed risk, TCG, Mt. Gox, Binance, the biggest unexpressed risk out there, TUSD, bloody, you can go on and on and on and on about, and bear markets typically don't end until, all the beta monkeys are washed out, and there's still a lot of them. And again, I go back to this chart and I go, we've only really had one beta monkey washed out, and that was SPF. That's the only deviation up to now. And this deviation, I think, should be extremely worrying to the bulls.
Can I, one quick question on this. So we always talk about the transition from a risk-on asset to a risk-off asset, or at least we speculate about it or wonder. That almost, when I look at that chart that's up now, it almost looks like a decoupling that way, to where, because it's not correlated with it, but is that because everybody's leaving pricing through Bitcoin to go out? Okay.
To me, today, like, you can come up with lots of theories about this, in terms of, with some news event. I don't think news drives markets. I think if you believe in an efficient market hypothesis, the informed money already knows what the news is, okay? Yeah. And that's why black swans like FTX cause these kind of divergences. But it was actually the day that the TradFi market makers left that we went from positive correlation, clear positive correlation, lockstep all the way into clear negative correlation. And to me, that indicates that these guys were operating strategies across markets that retained the correlation.
Okay.
That's my reading it. That it was literally a situation where these guys were running strategy. I don't think that's manipulative anyway. They were, hedging on one, buying on one side, and so on and so on. But we have no correlation anymore, which means this CT obsession with TradFi, which I always found hilarious. That all of a sudden people who can draw lines on charts are macroeconomic experts. Yeah. Is completely futile, because we're just not in the same world anymore. We are cut adrift. So it's kind of a curious days. Again, for me, I see nothing bullish whatsoever. This is not advice, it's simply my own view. And again, in terms of my positioning, that is a medium-term view. I'm always net long Bitcoin. I always will be. So my longer-term view is that this asset is an absolutely phenomenal asset. But I think that there is a lot of shock and a lot of pain to come in this market yet. Yeah. And I will, even though I've got, quite heavily short, still spot long, I will be very surprised if we have seen the bottom. I will be somewhat shocked. That doesn't preclude a little bit of further up movement. But I think if you look at the movement of money, which is always good to do. Let me just refresh this. This is on exchange. If you look at the, what are the big guys doing? Well, it's very clear that they have. So if I just take out, it's very clear they have no interest in this market right now.
Yeah.
So very just for clear. So you got price. This is the order book, and you can see typically when we hit these types of intensities on the order books, we tend to revert from them. So you can see here we the local bottom, here we the local top. You can see there's quite a bit of intensity here, which would indicate this is a decent chance of a local top. This is the flow of larger money, and as you can see, it's just continuing to exit. Now, I have to be clear, all of this can be wrong, but when you, from my positioning, when I sum up everything, I'm going, I'm not comfortable not being having my long position seriously hedged up the ass.
Yeah. Quick question. So when we see that kind of like, the big buyer, trend lines going down like that, orders. Yep. I'm just trying to merge that in with the, the charts about liquidity moving off of the exchanges and out of the markets. Is there any way to account for that from people moving stuff to cold storage, this chart at all? Like maybe people just going to the sidelines for 3 years with their
Yeah,
coins? Okay.
yeah, it could very well be, but you know what people forget. Yeah, absolutely, and we do see the amount of crypto that is held off exchange, or rather the amount of crypto, so we can bring up that chart, has been in decline for forever. Yeah,
Ew.
so let's just bring that up. I would be cautious about using it as a signal. Stick with me here. So if we look at exchange, Bitcoin held on exchange, what you can see is it's been going down since the COVID crash. Yeah? So since Bitcoin can't be destroyed, it's clearly moving off exchange. The reason I would caution is that it's been the amount of Bitcoin on exchange has been moving off through a bull and bear cycle. So you've got to ask yourself, is that really indicative in terms of price? And the answer is, if you use Bitcoin going down as a bullish signal, well, you're going to be very wrong for the last couple of years. The other thing that people forget is that just because Bitcoin is off exchange, it could be the avoidance of counterparty risk, and it can come back on exchange within 30 minutes. So I would not be, and again, to put this in some context, because you know, people tend to kind of zoom charts in and you go, oh my God, that looks amazingly bullish. But when you zoom out, you realize that there's still a couple of million coins on exchange, ready to do whatever they're going to do. And another thing I would say about that is that Bitcoin price is set on the marginal supply, i.e. what's on exchange, not by hodlers. So you can say that people who go off exchange are increasing available supply, even though there's still a couple of million of available supply on exchange. In fact, exactly 2.088 million coins on exchange as of right now. There is a supply-demand dynamic on exchange. So I don't think that you can use this really as a signal, in my opinion, in terms of near-term price action, because you can clearly see it's just been going down for years, regardless of which we pumped up and we dumped and so on and so on. So I would not be personally using this as a signal. The only big, you know, kind of change really was FTX, where everybody got freaked out with counterparty risk, rightly got freaked out with the counterparty risk. I mean, if you want to dig in even deeper, and if you look at miner flows, you know, what are the miners doing? Well, it is a bit shocking. We had the biggest inflow of miner coins into exchanges this week. So let me see, can I find that? So we had like 70,000 miner coins went onto exchanges this week, which again, you can argue what that means, but I don't think it's bullish.
Yeah, it doesn't sound like it.
Yeah. So, yeah, you know, again, that can be miners operating hedge strategies and so on and so on. But again, I know I was coming here and I'm bearish, but I think there's a good time. This is not a bad time to be bearish the market at all. And if you want to be bullish, you know, let the market give you an actual reason to be bullish. And I don't have that, because reducing liquidity, reducing on-exchange liquidity, TradFi is fucked off, blah-de-blah-de-blah-de. You know, whales are selling, whales are just distributing on exchange. I don't know what people... I don't understand how people, being cognizant of this data, and this is hard data, can be bullish.
Yeah.
You know, there are bullish signals. You know, getting an ETF, a US-based ETF, is immensely bullish in the longer term. No question about it. But again, I'm going to use the term in the longer term. Yeah. And I think that's it. And you know, there's just risk to be washed out. So I'm just my usual bearish self, Joe, as ever. Yeah.
But you know what I like about it though is that, I mean, we talk about this whether it's Grayscale or, you know, all these things about the ETF. how it's going to be short-term negative, but long-term hugely positive. I just want to reiterate, when you make these sort of, I don't want to call them calls, but intuitions, let's put it that way, you're still on the concept of the black swan event is going to create a deep V, not a sell off and drag down to zero kind of thing. You're still in
No,
the
I mean, I don't think Bitcoin. I think here's the thing about a spot ETF in the US that and why it's so bullish. It is now whatever you think about this as a Bitcoiner is up to you, but it is now an accepted TradFi asset. Yeah,
Yep.
It is part of the game. It is cemented in there. That, in my opinion, protects it from any form of banning legal stuff. It opens it up to a world of depth of capital that is phenomenal. I expect the next decade for Bitcoin to be massively bullish, and so on and so. Why I always retain spot long position. I just think that we ain't seen nothing yet in terms of the amount of blood that needs to be spilt first. And again, in terms of, people like events rather than charts, I would say, we have CZ still out there, playing his games. We have Justin Sun still out there playing his games. We have DCG for God's sake, 600,000 coins who are effectively bankrupt. What happens to them? We have Mt. Gox, 650,000 coins. Okay, so there's lots of, we have FTX coming back online, and that may be bullish, but that's also, quite a bit of sell pressure if people have just had enough and want to get out. So, other than the 2 million coins available for sale on exchanges, which is a lot, okay, we do have some systemic risks to the system, and we're cut adrift. Yeah, we are choke pointed out, and you can see in the data very clearly that we have no correlation to TradFi anymore. That will return with the BlackRock ETF, but not anytime soon, in my opinion. So, I'm not a buyer or seller of news at all. I'm a buyer or seller of order flow. Ultimately, it's the buying and selling that moves the price, not sentiment.
Right.
Yeah. I think that's pretty logical. Look, okay, you have to figure out who's buying and who's selling, but ultimately the only thing that ticks the price up is, buying and selling, up or down. That simple.
Yeah. Resetting the price.
Yep.
And that action, is driven differently in this market than say in TradFi, because that's driven off of events that lead to, changes in revenue forecasts or profit forecasts. Sentiment over here is on big, like you said, big events.
Yeah, I mean, we're a commodity, so
right.
we don't have annual reports or any of this kind of stuff. So we trade like a commodity, and that's one thing. That's one thing to understand. But the other thing to understand is that the price of Bitcoin and liquidity are joined at the hip. And while we are having a compression of liquidity into the top end of the crypto market, it's still leaving. And I don't view that in any way as bullish. And I just think there's so much more pain to come here. And again, not financial advice, just my view. Am I a bear on Bitcoin long term? No, I'm the biggest fucking bull you'll ever meet in your life. Yeah. I mean, but I'm talking in a decade, not in this year. I think that there we go. And I can equally be wrong.
Yeah, but I think, your strategies always seem to play out from our perspective. And I think that, we're talking about timing. It's, we're talking about a couple of years here or there. And we're talking about, how long does it take to get through, the U.S. regulatory stuff to have that shape up. And that's a couple of years. So,
yeah, I mean,
right.
this kind of lack of trust, what I would call deep trader money trust in TradFi, in shitcoins, is almost certainly the reason that we're seeing Bitcoin do a bear market rally here. And I would just bear that in mind if you're analyzing the market, that, this is just liquidity flow. And I think that's all, just look at money flow. It's very clear money is flowing out. It's very clear that money is moving from the shitcoin market into the Bitcoin market. The question you have to ask yourself, is it going to stick there or is it leaving? And the data says it's leaving to date.
Oh. Well, we will have to navigate those treacherous waters, it seems.
Absolutely. And it's a fun game. And, just don't over position yourself. And, it's I always say, look, if you're making a trade, or a position, as long as you're comfortable with being wrong, you're going to make it in this game. If you're not, you should not be taking that position.
Yeah. And also you always give, good advice, not advice, excuse me, but it's always sound to not to say, oh yeah, I want to invest in Bitcoin and then go drop your whole nut into it. Today, that's never the way you enter or exit. You talk a lot about TWAPing, regular buys over, I believe you like the 100-day period, yep. Once you start accumulating, I'm a little bit shorter than that, but I'm like 4 or 5 times, and a little bit of DCA, but I'm not playing the options game. I'm just kind of messing around in there. So, be cautious, everyone. Don't, always know stuff moves fast, and, you either want to take profits or you want to have more powder dry to average down. So, don't just jump on stuff and play for the long game like Sean does, and anticipate, get some limit orders in, or learn the game that he and his pro team are all doing all the time, with net long and hedging strategies.
Just don't drink as much Guinness as we did.
Yeah. Well, that's great, man. That's a good one. I love that.
At our age, that's 3 days. We go for pints. That's 3 days of the week are just ruined, man.
Yeah, exactly. Yeah, you lose the and then you see one negative thing, and it's like, oh my God, everything's falling apart. But you guys got like a 50-year time horizon left here, so
I don't have 50 years left.
No, not you.
As my business partner Mike always says to me, I don't think I can put up with another 10 years of this shit.
It is, because you're always, it's such continuous PTSD waiting for the axe to drop or something,
But yeah, if you're young, just it's better to make money slightly. I find it hilarious in this space. Okay, if you can imagine going back to before you'd ever heard of crypto, and the fact that you could make a 20x return over the space of 2 years would be, you wouldn't believe it. Okay, and yet in this space, people think a 20x return is it's nothing. Yeah, I'm gone. Okay, cool. Right.
Yeah, exactly.
No, we're all looking for that 100 or 1,000x return in a couple of years. Yeah, I mean, they happen, of course they do, but it's not something to plan your life on.
No, and there's a lot of luck in those too. It's people get that big win early, and they think they expect it to happen again all the time, in sports and investing and whatever. And if you're super young and it happens, take it as wow, I got lucky, or it was a good win, and then hedge and manage risk. Don't come back in expecting that to happen again. Well, hey, that happened last time. Let's put in 10 times as much.
Yeah, just remember that the people do win at roulette. Okay,
right?
Doesn't mean playing roulette is a good strategy for your retirement.
True that. All right, buddy. Well, I'm going to cut us out because I realize we went over. Great chat with you as always, and to the listeners, the Thursdays with Sean are always BTC day. So we always love to get his insights into what's going on in the BTC world. And plus he, plays with us over in the altcoin world some. And you saw his charts where he's tracking certain ones and looking to accumulate. So Monday when Brad's back, we'll go through all the news in more depth. He gets those stories stacked up and we get a nice discussion going. But today I wanted to focus on this and, being a little bit selfish, I always like to hear the words from Sean. And be able to ask questions as I see fit. But thanks, Sean. Great time today. I really appreciated it. And I wish you a very good weekend.
And you too, sir. Take it easy, guys. Cheers. Bye.
Bye, buddy. Cheers, everyone. See you later. Bye-bye.